In today's video, I'm breaking down one of the most explosive moves of the week, which is Bird, and the catalyst that drove it, so you can learn how to spot these setups as they are happening, not after the fact. I'll walk you through what changed in the story, why this one was different, why the market reacted so aggressively, and what most traders missed when they first saw the headline. If you're new here, I provide regular catalyst analysis on explosive stock moves and swing trade opportunities. So if you want to develop an edge around news and catalysts that drive these kinds of moves, make sure to subscribe and hit the notification bell. So on April 14, a small cap stock called Bird exploded over 600% in a single day. And most traders dismissed it as just another AI pump. And it's kind of understandable because there were a lot of AI pumps recently that didn't have such explosive moves. But if you actually break down this particular catalyst, you'll see something very different. This wasn't just a hype. It was a perfect example of what I call catalyst stacking, where multiple high impact events collide at once. If you understand this, you'll be able to tell with high accuracy when a stock is a gap and crap and when it's a real pivot. So here's the context. Bird was originally a footwear company that was going to announce bankruptcy, so not exactly the kind of stock that you expect to be involved in AI. So when the headline dropped on the 14th that they were pivoting into AI infrastructure, most traders rolled their eyes. A shoe company doing AI? It sounded like a promotional move. And that's where most people stopped. But the professionals always look deeper. And the real opportunity here was in what was happening behind that headline. Let me explain. The first catalyst, the one that everyone saw, was the AI pivot. Bird essentially repositions itself as an AI infrastructure company, moving into GPU as a service model, which taps directly into one of the hottest themes in the market currently. And this is key because in today's market, anything tied to AI and AI infrastructure in particular instantly attracts attention, volume, and speculation. But on its own, this catalyst is not enough because we've seen plenty of companies try to rebrand themselves into AI and actually fail. So the question becomes, why did this one work? The real answer, and it's actually a major edge, is catalyst stacking, where multiple catalysts hitting at the same time, reinforcing each other. And in Bird's case, there were three major catalysts colliding at once. Catalyst A, which is the asset sale. So the company announced that they sold their core footwear business for $39 million. This is critical because it creates a valuation floor. It tells the market that there is real cash here. This isn't just a story. So instead of being a failing shoe company, Bird now suddenly becomes a company that can do anything and is sitting on a meaningful liquidity. Catalyst B, the pivot, which is the AI funding. So second, they secured $50 million in funding to build AI infrastructure. Now combine this with the asset sale, that is the previous catalyst, you're looking at roughly $89 million in liquidity. And here's the key insight. The company market cap before the move was around $20 to $22 million. So overnight now, the market had to reprice a company that now had almost 4 times its market cap in cash and funding. That's not hype anymore. That's a fundamental mismatch. And the price now has to change and reflect this new valuation. And catalyst C, that's the cherry on top of the cake, the trigger, which is the special dividend. So third, this is what many traders overlooked when they announce a special dividend. This is important because it acts as a credibility signal. It tells the market not only there is real cash, but they are returning value to shareholders through this special dividend. That kind of announcement attracts attention again from both traders and investors and reinforces the legitimacy of the entire move. So now when you combine all of the three, an AI hot narrative, the real cash from asset sale, additional funding from the pivot, and a shareholder-friendly dividend, you don't just have a story, you have a full reevaluation event. So the market wasn't just reacting to a hype, it was repricing the company entirely based on this new information. And this is your edge builder, guys. Most traders saw one catalyst, the AI pivot, and they dismissed it. But the real edge comes from asking, what else is happening at the same time? Because the biggest moves don't come from a single catalyst. They come from a multiple catalyst stacking together and forcing the market to reprice and stock very quickly. Now, of course, there were risks associated with this trade. In Bird's case, one of the main concerns before the market was open was that the funding that came, the $50 million, was in form of convertible debt. So there was a concern about convertible debt dilution, which could impact shareholders down the line. So while the catalyst creates a massive short-term opportunity, it doesn't automatically mean long-term value. So that's why it's at best a day trade or a swing trade, but that's it. That's why it's important to separate trading the catalyst from investing in a company long term as well. So my takeaway here is that Bird's 600% move wasn't random, it wasn't just hype, it was a textbook example of catalyst stacking, where narrative, capital, and structure all aligned at the same time. As always, please share, like, and subscribe, and thanks for watching.